Market Outlook. Calendar Week, CW25. Calendar Week 24 was not a classic schedule-driven week, but an event picture shaped by macro data, central bank expectations, credit stress, AI valuations, and geopolitics. In the United States, inflation, producer prices, the labor market, and consumer expectations were in focus. The robust labor market kept pressure on the rate path, while price data and inflation expectations tied the market to the dollar, the US Treasury curve, and real yields. For digital assets, the key issue was the link to funding costs, liquidity, and the risk budget. At the same time, the discussion around a possible overheating in the artificial intelligence sector remained present. High valuations, narrow market leadership, and the dependence of major indices on a small number of technology stocks increased sensitivity to rising yields. When valuations in growth-related segments are repriced, the willingness to move capital into more volatile parts of the market declines. Altcoins react more sensitively than Bitcoin because market breadth and order book depth weaken more quickly there. A second burden came from the credit system. Signals of stress in the private credit market and higher funding costs kept risk premia in focus. Credit stress reduces balance sheet capacity, increases demand for liquidity, and shifts capital into more liquid segments. In the digital asset market, Bitcoin therefore remains the leading structure, while less liquid tokens react more sensitively to capital outflows. The Iran conflict remained a geopolitical disruptive factor. The decisive transmission channel runs through energy, transport costs, inflation expectations, the US dollar, and real yields. Rising energy and hedging costs keep the inflation channel active. Higher real yields and a firmer dollar reduce the risk budget for digital assets. Thinner order books amplify the effect of short-term news impulses. Two markers are sufficient as a bridge into the current situation. Bitcoin dominance stands at 56.4%. The Crypto Fear and Greed Index stands at 18, placing it in the extreme fear range. Together, these indicators point to a market structure focused on core liquidity, limited market breadth, and defensive positioning. Quantum data analytics did not develop any research signals in this environment. The reason was operational. The market regime was event-driven, with reactions running through macro data, central bank expectations, credit stress, and geopolitical news. In such phases, the risk of regime misclassification increases. Filter adjustment and retraining therefore remained in focus. Without reliable market structure, confirmed liquidity, and a calmer event window, no activation took place. For calendar week 25, attention shifts to several event windows. At the start of the week, Chinese data on industrial production, retail sales, investment, and the labor market provide the first impulse for Asia, commodities, and liquidity expectations. This is followed by the Bank of Japan rate decision. The effect runs through the yen, carry trades, and global funding costs. In the United States, retail sales, the Fed meeting, rate projections, and the press conference take center stage. This block steers the most important channel of the week: the dollar, US Treasuries, real yields, and the risk budget. For digital assets, the sequence is mechanical: rate picture, dollar, liquidity, Bitcoin, then altcoins. On Thursday, the labor market comes back into focus through initial jobless claims. The Bank of England is also relevant as a factor for the pound, gilt yields, and rate sensitivity. On Friday, the US holiday reduces cash market liquidity. In a thinner market environment, ETF flows, perpetual positioning, and token unlocks have a stronger local effect. Geopolitics remains a factor through energy, transport, and risk premia. Operationally sensitive windows lie in Asia around China and Japan, in the US session around retail sales and Fed communication, and during the phase of reduced liquidity toward the end of the week. Increased slippage occurs where macro data, thin order books, and leveraged positioning appear at the same time. In altcoins with unlocks, weak spot depth, or one-sided funding, local execution risk increases. The operational framework remains strictly data-driven. Research signals are reviewed only when market structure, volume, spreads, and follow-through flow align. Near major releases, the focus remains on slippage control, reduced reactivity, and evaluation rather than permanent activation. This report does not constitute investment advice, contains no buy or sell recommendation, and serves informational and research purposes only. Quantum data analytics: analytical, strategic, innovative.